Start with the big jump that we have seen in the rupee, which is trading below the $70 mark. The Indian currency opened today with gains of about 50 paise and thus hitting a 3-month high in the process. The overnight strength really comes on the back of a weak dollar. Lata Venkatesh is here with more details. Lata, do you expect this gain to be sustained at all?
Well, in the first place, this gain is part of a global weakness of the dollar, with Jerome Powell suggesting that probably the number of rate hikes that the market is penciling in is more than he actually has in his mind. They may be one fewer next year. The dollar obviously became weaker because it's going to yield less interest. And as the dollar weakened from 97.4 or thereabouts, the dollar index, to below 97, more like 96.8 and 96.7 for a better part of the day, you found in contrast all emerging market currencies rising, and that's the list in front of you. The rupee up 1.08 or thereabouts, shifting. Of course, all these are at a point in time. The rupee has ended 1% higher. The real continuing to trade 0.6, 0.7 higher. Ringgit has ended 0.3 higher. Lira again continuing to trade 1.1% higher. So we are actually very much in line with other emerging market currencies like Indonesia and Turkey that have risen. We, of course, have the added tailwind of crude, but that's been there for some time now. What triggered it? Exactly as has been going previous days, except with greater gusto, appears to be the coming of FII funds. Buying both debt and equity is what we are told. So that's what the banks were doing, selling dollars for their clients. And in addition, of course, probably taking short positions for themselves as well as for their clients, especially, exporters who just feel that it's good to sell now, lest they get an even lesser bargain later on, later on in the month. The only point that appeared to be missing is the RBI. There was an expectation that RBI would come in and, mop up dollars. They have spent about $30 billion since April trying to smoothen the decline of the rupee. Now is the time to come back and take some of those dollars back. But I didn't hear many of the bankers say that there was a lot of dollar mopping, which looked like the RBI. Usually RBI goes with the flow and on a one-odd day suddenly strikes. But you should be prepared for RBI dollar buying sometime soon.
Okay, fair enough, Lata. Thank you for joining in with those details. Now, the rupee appreciation coupled with strong global cues and fall in crude prices translated to a big rally on the last day. So both the benchmark indices closed at 2-month level highs. The Nifty ended above the 10,850 mark and thus posted its biggest gain in a series since March 2016. The Sensex ended with gains of about 450 points and topped that 36,000 mark. The Bank Nifty rallied close to 500 points and it is now at a kissing distance of that 27,000 mark. Mid-cap index relatively underperformed, ending with gains of just 0.5%. Anuj Singhal joins in now with a wrap of today's trading action. Anuj, what do you make of today's sudden up move that we saw? Was it largely global tailwinds fueling the rally?
Stunning rally for the market, especially if you're looking at the large cap indices, which is what you should be looking at right now because it's really been driven by FII money. India has been the best performing market globally, not just today, but this month itself. What are the factors that have led to this big outperformance? The biggest perhaps has been the demise of crude from 86 now to 58. Massive move. Market's optimism on politics. Till about a month back, the market was factoring in BJP losing in all state elections. And now perhaps that has changed. And of course, the FII money is back. And when FII money comes into stocks like HDFC Twins, they move big. And that's what's happened this month. The large caps have moved. In fact, today also Kotak, IndusInd Bank, HDFC Bank, Bajaj Finance, Mahindra and Mahindra, the who's who really of Indian market. The large FII-owned stocks were doing well, JSW Steel. On the losing side, you had HCL Tech, some profit taking, and of course, Rupee's move, Tech Mahindra for same reason, and Power Grid. Now, what next? From 10,000 to 10,800 has been a large move, and the markets do appear a bit overbought. But let's see, the mid-caps have also underperformed quite a bit. So, won't surprise me if at some point in December, we start to see some kind of profit taking.
Okay, fair enough, Anuj. Thanks for joining in with that. Now, as the debate surrounding liquidity in the banking system rages on, Kiki Mistry, the Vice Chairman and CEO of HDFC, told CNBC TV18 that the liquidity situation in India has improved since the last couple of months. Now, he further expects the RBI to adopt a neutral stance in this policy. Listen to what he had to say to us earlier today.
Liquidity has been tight in India for a very long time, for almost a year, but the nervousness which was there in the market a couple of months ago, a significant part of that nervousness is gone. And that nervousness emanated because of one NBFC which failed, which was Ireland FS. And after that, there were a lot of reports about how some of the NBFCs had taken mismatches and had a very high leverage ratio. But all the commercial paper, which is the short-term borrowings which these companies had done, and all the commercial papers which matured from then till today have all got honored on time. So that has given a lot more confidence to the markets. The liquidity situation today is better, much better than what it was a couple of months ago. Yes, it could be even better, but it's a lot better than what it was a couple of months ago.
Well, meanwhile, Finance Minister Arun Jaitley has defended the new GDP back series data that handed drastic cuts to the growth rates achieved under the previous UPA regime. The average growth rate under UPA has been revised below 7%. Now, this was above 8% according to the old series. From fiscal year 2006 to fiscal year 2012, the growth rate has been revised lower for every year. The sharpest cut has been handed to FY11, where the revised GDP actually stands at 8.5% against the old series growth rate of 10.3%. So former Finance Minister P. Chidambaram questioned why Niti Aayog released the data and not the Central Statistician's Office, calling it a hatchet job. He went on to call the Niti Aayog a utterly worthless body that should be shut down. Defending the data, Finance Minister Arun Jaitley said, and I'm quoting again, data based on facts and on the best global practices is rejected by the Congress party because it takes away the last of its surviving arguments. My GDP growth was higher than yours. End of quote.
Welcomed by the UPA in 2015 is now being criticized in the year 2018 because it revises it downwards. The CSO is a highly credible organization. It completely maintains an arm's length distance from the finance ministry. In fact, we also come to know of the data only when it is finally released. All former individuals and very eminent people who headed the CSO are of the same opinion that this data is far more inclusive. I don't think any service is being rendered by people who choose to discredit a highly credible organization like the CSO because its data is really based on facts and the revised formulations, which is a continuous exercise because every time you try and improve upon your formulations to make them more representative of the real state of the economy itself.
Modi आंकड़ों का मदारी, क्योंकि जब इनको लगता है कि भाई आंकड़े बदलने हैं तो सरकार इनके साथ चलने लगती है, इंडिपेंडेंट ऑर्गेनाइजेशंस इनके साथ चलने लगती है, चाहे वो CSO, NSSO हो। तो मुझे तो लगता है कि जब असत्य के आधार पे सरकार चलती है ना तो कुछ भी कर सकते हैं ये लोग। जब इन्होंने खुद जो आंकड़े सही आंकड़े दिए तो लग रहा है कि भाई कैसे करें, क्योंकि इनकी ग्रोथ रेट तो बहुत कम है। हाँ, इस साल भी 7.23 से ज़्यादा नहीं होने वाली, तो कैसे 2019 में जाएंगे जब तक ये मैनिपुलेट नहीं करेंगे, जब तक ये मदारी की तरह आंकड़ों का बदलाव नहीं करेंगे।
Meanwhile, my colleague Sapna Das caught up with Sanjeev Sanghi, the Principal Economic Advisor to the Finance Ministry, and asked him about his views on the new GDP data. Here's exactly what he had to say.
This series increased the growth rates for some years, not just the growth rates for the ones in which this government was in power, but even for the previous one. Now, when we used exactly the same methodology backwards, you ended up with a certain set of numbers. Now, one can accept this and say this is a good system, which I think it is. It's an internationally accepted system, and apply it backwards. And if it happens that it gives you a certain outcome, so be it. One has to then accept it. One cannot accept one part of the data and not the other part of the data.
Meanwhile, former Chief Economic Advisor Arvind Subramanian has broken his silence finally on demonetization. In his new book, he has called the decision a massive draconian monetary shock. However, Subramanian's book remains silent on whether he was actually consulted in the entire decision-making process. In his book titled Off Council, The Challenges of the Modi-Jaitley Economy, Subramanian writes, and I'm quoting, Demonetization was a massive draconian monetary shock. Growth had been slowing even before, but after demonetization, this slide accelerated, end of quote. Subramanian goes on to say that he does not have a strongly backed empirical view on the exercise. However, he also did add that welfare costs, especially to the informal sector, were substantial. All right, let's get you an exclusive from the deal space. Then we learn from sources that after a delayed IPO, Lodha Group is set to rope in an institutional investor to reduce debt. In that effort, a marquee Canadian private equity firm is likely to invest in the company's assets. Nisha Poddar broke that story, and she's here with the details. Nisha.
Thanks for that. Of course, in many of the efforts being taken by Lodha Group to reduce its debt pile, this is yet another one. What we do gather from sources with direct knowledge is that Lodha Group is likely to get an investment from Canadian fund CDPQ of about $100 million or 700 odd crore rupees in its Smart City project, Pallava project. Now, this will mean that along with the 700 crore rupees, remember the two UK Central London projects that they have put on the block, that will fetch them about 4,200 odd crore rupees. So close to about 5,000 odd crore rupees would be raised by Lodha Group in order to really finance and reduce its debt pile on the books. Remember, a lot of concerns had come in as far as liquidity situation for the company is concerned and whether it's reaching a default stage with its bond, US denominated bond really falling. So a lot of explanatory and clarificatory statements really came in, and steps have been taken quickly by the company to sell some of the assets and get in private equity investors to reduce the debt pile. So CDPQ could be an investor in their marquee project as well, is what we are gathering from sources with direct knowledge.
Okay.